everyone, welcome back to ASX Market Watch and charting trend signals around the world. Thank you very much for joining me. Just a quick look at the charts. Basically, we look at the trend of the world indices just to determine which way these indices are heading. It can really help, like if you combine it with your own analysis or whatever you happen to be doing. It's just nice to know which direction the world is actually heading in. We'll start with down under. We'll start with America, the S&P 500. Just really quickly, here it is here, because over the last couple of market watches, what we've actually been looking for is the last one I said was a close below 1400 on the S&P 500, or on the Dow Jones it was below 13,000. So this is the Dow Jones here, and 13,000 was the level that I was looking for, right there. And as you can see, it's really plummeted through that over the last couple of weeks, and when it did, it really continued down. So that's the Dow Jones. And obviously that's in a downtrend. On the Dow Jones, what I'd be looking for is on a short-term basis. If it closed, it would really have to close at this stage back above the 13,000 level for it to be in any way, shape, or form a short-term uptrend for me personally. On the S&P 500, it would have to be closing back above that 1400 level for it to be in a short-term uptrend again. Now, just really quickly of note is in the S&P 500 is it's right on that trend line support. So that will find support there usually, just like it tended to find support at this trend line right here, and also here. So basically, yeah, that's what trend lines tend to do. They will give you some support and resistance in the future as well, and that's where we're currently at on the S&P 500. Looking at other markets as well, actually, let's check out the FTSE. Again, very, very simple stuff. What I've been saying over the last couple of months, pretty much, on the FTSE. This is last 2 years, basically, and as you can see, this downtrend. As I was saying before, support and resistance. Look at it. It's just absolutely beautiful. It's provided the perfect resistance. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13. More than 13, 14, 15 times, basically. And instead of heading upwards through that level, which would have been a breakout, did not happen. Instead, it's actually come back below the trend line, and really over just this last week, it has started to fall away again. So there is a reason behind all of this, and I'll get into that just after I look at the All Ordinaries, which is the one that I personally trade. And again, what have we got? Say if we were looking at this for the first time, we did have a little bit of a short-term uptrend, which was absolutely fantastic. Recently, here we go. So isn't that quite beautiful? Really only this week, and it will probably be on Monday or Tuesday this week just gone, we got that signal that went below the trend line, and it's below the last couple of troughs as well there on the All Ordinaries. That's a short-term downtrend for me, and again, if it would have to sort of close back above the 4,500 level for it to be anywhere near a short-term uptrend for me on the All Ordinaries. Now, let me just quickly talk about the reasons behind this from a psychology point of view. Psychology is probably one of the greatest things to study as in regards to the market, because it affects everyone, especially when there's losses on the table or gains on the table. Us human beings tend to be very, very irrational creatures, and that's why I love it. That's why it's just such a beautiful thing to study. Now, what have we got coming up? We've got the decision on Greece, and whether it stays in the euro, whether they give it more money, and what's happening there. They've got obviously Spain and the other ones as well, Portugal probably. You know what, I don't keep up with the current events too much, but I know that that's going on. So that no one knows, except probably a handful of people, exactly what is going to happen there. No one can really tell the future, and of course there might be a black swan event, a curveball coming out of left field. There's always that possibility. Anyway, the idea is that it's uncertainty. So uncertainty, no one really knows. And the other thing is the US fiscal cliff. Now, I can tell you what I believe is going to happen. One, I believe that whatever is going to happen, they're going to do something to bail out the countries that they need to. They'll avert a crisis in some way, shape or form. And the same goes for the US fiscal cliff. They'll increase it or whatever they need to do to basically keep the markets calm. However, they won't do any of this until the 11th hour, until the very last minute, simply because it's not good negotiating tactics to do it early. I mean, let's be honest. If we've got the two different sides in the US, the two, and again, I don't really keep up with it, but we've got the Democrats and Republicans. If we've got those two different sides, if they come to an agreement, early, it possibly means that they haven't got the most out of that agreement from either side, and they'd both be feeling a little bit, a little bit unhappy with their decision. However, if it comes down to the wire and it's, right at the last minute, 11th hour, they're both probably feeling that they got the most juice out of their decision and their negotiating that they possibly could. That's the reason why that's going to happen. Again, it's basically psychology, and so yeah, that's basically. So I have a feeling that it's all going to be fixed, but in the meantime, it's going to be uncertainty. And what does uncertainty lead to, everybody? It leads to fear, because no one really knows if no one knows what's going to happen, they tend to fear it, basically. They fear the unknown. And again, it's just one of our beautiful human traits. It's part of being human, one of these wonderful adventures that we have. But yeah, so in other words, this is the all ordinaries, and what I would be expecting is until around about the end of the year, we'd probably... if I just get rid of that, we'd probably see the market stay below this trend line until at least the end of the year. That is that's just the way that I see it happening and unfolding for those reasons that I mentioned before. And yeah, basically it is what it is. Obviously, follow the trends yourself, because it may turn out to be completely wrong, and that's why you've just got to always keep alert, keep your stop buy levels in, keep your stop losses in, and trade with the trends as they unfold. The reason I say that again is because just really quickly. Anyway, so that's that. If you want to tune out now, but I'm just going to show you some of the stocks that I own as well. The reason is, look, I mean, this is one that I bought mid this year, Shablam and Shazam, right there. That was a trend change for me right there. And recently, it's basically, the trend has changed in the opposite direction. So not a massive gain there. I mean, it's a gain, but not a massive gain. But the ticket is that I got out as the market turned around, and that sort of saved me from further losses there as well. Obviously, it does work in the opposite direction. This is UXC, another one of the stocks that I bought in middle of the year, right there. Hallelujah. That for me, obviously, that's a trend change. It's gone above the trend line. It's sort of made a breakout move there, which is what I look for. And again, even though it had started to head down, it was fairly safe and hadn't really crossed below any of the previous troughs or anything like that. And now, hallelujah, happy days, it's starting to head up again. So yeah, really, that's why I say follow the trends as they unfold, because you just never know. Even though the market is falling right now, this particular stock is still holding up extremely well, and I don't want to miss out on any of the gains that I might miss out on this little beauty, just because of the overall market falling, and I might be getting scared. No, you have to follow where the price is going, and currently in this stock the price is going up. A very similar story for a lot of other stocks as well. Thorn, is this Thorn? Yep, TGA. And again, how simple is that? It just crosses above the trend line there, little breakout. And even if you wanted to get fancy, if for those of you familiar with low risk trades, obviously the amount between your entry, which would be here, and your stop loss, which would be here, is a very, very small amount. It's actually 5 cents. So if you can imagine that as a particular trade using a continuation pattern, for example, and that's all that is, it's a little consolidation move over about a month. And when it breaks out, that would be your trigger to buy using that particular signal. But if your risk is 5 cents, then 1, 2, 3, 4, 5, 6, 7, 8, about 9 times, 8 or 9 times your initial risk. If you're risking $1,000 per trade between your entry and your stop loss, that's $9,000 on just one trade, and that's that has the potential to really set your account up and do wonderful, wonderful things. Hallelujah! Alright everybody, that's it! Anyway, I hope that hasn't bored you too much. I hope you've gotten a little bit of goodness out of that. Have a great weekend, and happy trending until next time. Catch you later. Bye for now.